Welcome to the deep dive. We're here to take those complex financial stories, the ones that seem tangled up, and really pull them apart for you, give you the stuff that actually matters.
Yeah, get to the core of it.
Exactly. And today, wow, we are diving into a brand that's almost like its own currency, Ferrari, ticker RACE for those following along.
Oh, absolutely. Ferrari is, well, it's the gold standard for premium valuation in the auto world, maybe even beyond. Analysts almost treat it differently.
Like it's in its own little universe.
Pretty much. It constantly trades at this huge premium, and that's driven by, well, the mystique, the history, and let's be honest, just incredible margins.
Right, which makes what happened last week just stunning. For a stock that's usually so solid, so premium, it took this massive, really rare one-day hit.
We're talking nearly 16% down in one day.
16%.
I mean, that kind of drop is almost unheard of for Ferrari. Our sources are saying it's the biggest single-day fall since they went public.
Back in 2015, right? So almost a decade.
Yeah, almost 10 years. It really felt like a genuine market panic for a moment there.
And the immediate story, the headlines you saw everywhere, they jumped right on the company's big new move.
Right.
The plunge happened like right after Ferrari gave this sneak peek of its first ever all-electric car, the Elettrica.
And this wasn't some quiet press release either. It was a big show, laser light.
I read about the laser light show and like bass-heavy music.
Totally. Trying to give it this huge, dramatic, Vegas-style reveal. The message seemed clear. Ferrari's betting the farm on an EV and boom, the market hates it.
And that's the story most people probably still have in their heads. Ferrari shows the EV, stock tanks, simple cause and effect.
Seems logical on the surface.
But here on the deep dive, we always say when the market has that kind of catastrophic reaction, especially with a brand built on intangibles like Ferrari, you gotta dig deeper.
Absolutely. You just have to look past that first easy narrative.
So our mission today for you listening is really key if you want to understand this ultra-luxury space. We need to do two main things.
Okay.
First, we've got to really unpack the Elettrica itself, the strategy behind it, what it means for Ferrari, because this is a huge pivot.
It really is.
It
Moving
is.
away from that iconic combustion engine sound and feel.
And second, and this is really the heart of it, we are going to dig deep into the financial numbers, the projections they released with the car reveal, because that's what actually sent the stock tumbling.
Spoiler alert.
Right. Spoiler, it wasn't the 1,000-horsepower EV.
Our sources are pretty great on this. We've got input from auto analysts, investment managers.
Yeah.
It gives us a really balanced picture.
So we get the car specs, the whole messy competitor situation in luxury EVs.
Yeah, what Lamborghini and Porsche are doing or not doing.
Plus the unique brand challenges Ferrari faces, and crucially, that detailed financial guidance. That's the piece that explains the market correction.
Exactly. It's all in the numbers, eventually.
Okay, let's get into it. And let's start where the media frenzy started with the car itself.
Right, so the build up to this Elettrica reveal was huge. I mean, this isn't just Ferrari making another model.
No, it's them trying to translate, like 75 years of history?
Right.
That visceral V12 sound and feeling into batteries and electric motors. It's a massive translation job.
And like you said, the unveiling wasn't subtle, lasers, heavy music.
Yeah.
They were clearly trying to preempt the idea that EVs are just quiet appliances.
Definitely a calculated move. They had to tell their core customers, the people who spend $500,000 or more on performance and drama, that this electric machine would deliver that same level of excitement.
Because if it felt like they were apologizing for it being electric.
Oh, the brand damage would be instant. Irreparable, maybe?
So performance specs were absolutely critical. If this first full EV didn't match or ideally beat their combustion cars, well, it's game over for credibility right there.
Yeah, the whole project would just fizzle. So what did they actually promise? Well, the early details we have suggest they went aggressive on performance, like really aggressive.
The numbers are staggering, really. For any car company, they're talking 1,000 horsepower for the Elettrica.
1,000 horsepower.
Yeah. That puts it right up there with their hybrid flagship, the SF90 Stroydale. It's basically saying, we're not sacrificing power.
That's a statement number, isn't it? A nice round 1,000. It signals, okay, electric isn't a step down, it's potentially a step up in raw power.
Exactly. But power's one thing. What about actual speed? Top end.
Good question.
They cover that too. The claimed top speed is over 192 miles per hour.
Okay, so still very much supercar territory.
Absolutely crucial. For the Ferraristi, these cars are about pushing limits, speed, performance, The electric platform has to be seen as enabling that, not restricting it. It can't just be quick off the line. It needs that top-end capability, too.
Okay, power, dot check, speed, dot check. What about the EV Achilles heel range and charging? Especially for these buyers who, let's face it, probably aren't used to worrying about finding a plug.
Right. You don't want your multi-million-dollar hypercar experience ruined by range anxiety. They seem to have tackled the psychological side of this pretty directly.
How so?
Well, the baseline range figure meets that kind of industry standard mark of over 300 miles.
Which is decent.
But they didn't just say over 300. They specifically mentioned an extra 29 miles on top of that.
Huh. 329 miles. Why such a specific number? Seems odd.
It's likely strategic messaging. It's about giving that psychological cushion. Telling the owner, look, you've got plenty in reserve. Don't stress about finding a charger right now.
Okay. It's like building in that extra peace of mind for a luxury buyer who doesn't want to be anxious about range.
Precisely. We know this is a concern, even for you, so we've over-delivered slightly. It addresses the anxiety head-on.
So, okay, let's pull these pieces together. 1,000 horsepower, top speed near 200 mph, and range handled thoughtfully. Based on this early look, the Elettrica actually sounds very Ferrari.
It does. Performance-wise, it seems to hit the marks they needed to hit. The product itself, far from looking like a reason to panic sell, actually looks like a pretty compelling translation of their performance DNA into the electric age.
Which strongly suggests the car wasn't the reason for that massive stock drop.
Exactly. The tech specs seem to reinforce the brand, not undermine it. We'll get more design details and driving impressions closer to the 2026 launch, obviously, but the first impression is strength, not weakness.
So that means we have to look elsewhere entirely. We need to get into the strategy and the financials to figure out why the market reacted so violently.
Right. Let's unpack the strategic gamble here, because the Elettrica isn't just another car. It's a huge bet on the company's future direction.
Okay, this is where it gets really interesting, strategically speaking. Ferrari's in this tough spot, isn't it? Some analysts call it being stuck between a rock and a hard place.
That sums it up pretty well. You've got this incredible legacy, the engine sound, the history, that raw feeling.
The soul of the machine, some would say.
Exactly. But then you have the reality of where the world is going, electrification. It's undeniable.
So it's like the classic innovator's dilemma, but maybe even harder for Ferrari because the brand is so tied to that specific combustion technology.
Totally. If they stick with combustion too long, do they become like a museum piece in 20 years? But if they jump too fast or get it wrong, they risk pushing away the very people who built the brand legend.
It's a tightrope walk, but they do have this one massive advantage, right? The Ferrari moat.
Yes, the moat. It's their superpower. It's this intangible thing built on scarcity, brand power, pricing power, something basically no other car company can copy.
And that moat is why their EV strategy can be different from, say, Ford's or GM's.
Absolutely. Key difference. You see these big automakers, even some luxury ones, just hemorrhaging money on EVs right now. They're pouring billions in, and the immediate returns, often negative. They're losing money, hand over fist, as one source put it.
But Ferrari isn't.
Well, they're protected to a degree. Because they operate in this ultra-luxury space, they can command prices that maintain these incredible margins. They have a pricing shield.
Let's talk numbers on that shield. That gross margin figure is just wild.
It's astronomical. Our sources put it at 51.21%.
51% for a car company.
Unheard of, really. It means for every dollar of car they sell, they keep over 50 cents before covering operating costs, R&D, etc. That's the financial proof of their exclusivity. They don't need volume. They sell desire.
But even with that margin, developing a whole new bespoke EV platform, batteries, cooling, that still costs a fortune, right? That moat doesn't make the R&D free.
No, definitely not. The investment is still massive. And that leads us to the really fascinating timing here. Ferrari is going in big on luxury EVs.
They're zigging?
Exactly. They're zigging, while almost all their direct competitors are zagging, or at least tapping the brakes hard.
Right. Let's talk about that competitor retreat. It really highlights how bold or maybe risky Ferrari's move is. Lamborghini, for instance.
Lamborghini is probably the most direct rival historically, especially in that V12 space. And they just pushed back the launch of their first full battery electric car.
Why? What reason did they give?
They basically said, the market's not quite ready. Demand isn't strong enough yet at that extreme high end. So they delayed it a year from 2028 to 2029. They're waiting, essentially.
Okay, so Lamborghini's waiting. What about the Germans? Porsche.
Similar story, in a way. Porsche already has the Taycan EV and the electric Macan SUV out there.
Right, they were early movers in some ways.
They were, but now they're actually cutting back on their plans for more battery electric vehicles, BEVs, because sales of the Taycan and electric Macan have been a bit softer than they hoped.
Just to clarify for everyone listening, BEV means full battery electric, no gas engine at all, right? Which is different from the hybrids Ferrari already sells.
Crucial distinction, yes. Full BEV is the big leap.
And if even Porsche, with its engineering reputation, is seeing soft sales for the Taycan, that must make others nervous.
You'd think so. It suggests the market, even the wealthy buyer market, isn't fully sold on the high-performance EV sports car concept yet. And then there's Maserati.
Part of Stellantis now.
Right. They apparently just straight up canceled the planned BEV version of their MC20 supercar. Just scrapped it.
Wow. Okay.
So the pattern among competitors is clear. Caution, delay, wait and see.
And meanwhile, Ferrari is
Full speed ahead, planting their foot firmly on the accelerator.
which makes the size of their investment commitment really stand out. How much are they actually spending?
It's a serious number. They've earmarked 4.7 billion euros, specifically for electrification new platforms, tech development between 2026 and 2030.
4.7 billion euros. How big is that relative to the company's total value?
It's significant. It shows this isn't some side project or experiment. It's a massive, focused, strategic bet. Relative to their production volume and overall size, it proves electrification is central to their growth plan for the rest of the decade.
Okay, so big investment. What's the goal? What kind of sales are they expecting from these EVs?
They've set a pretty ambitious target. By the end of the decade, so around 2030, they expect BEVs, those full electrics, to make up 1/5, 20% of their total sales.
20%. That's a big chunk for a customer base used to V8s and V12s.
It's a rapid shift they're aiming for. But one important piece of context here, as our sources point out, Ferrari isn't totally new to electric power.
Right, the hybrids.
Exactly. Roughly half of the cars they ship right now are actually hybrid.
Well, half. Wow, I didn't realize it was that high already.
Yeah, so their customers are already kind of used to electric motors helping out, boosting performance. It forms a sort of bridge, technically and psychologically.
But it's still a bridge, not the final destination. There's a big difference between a hybrid where you still have that engine roar.
And a full BEV that's fundamentally silent, relying purely on electric motors. That's the leap of faith.
That leap is the core risk. There was a quote from an investment manager, Brian Lum, saying luxury EVs are still a young and immature category.
Yeah, but he also added that electrification is crucial for building that next generation of Ferrari.
Ah, okay. So it's about future-proofing the brand.
That seems to be the long game. They know they need to capture the kids, well, the wealthy kids, who grew up seeing Tesla as cool, who see electric as the future. If they don't embrace it, they risk becoming irrelevant to buyers in 2035 or 2040.
Makes sense. But making this huge bet now while competitors wait, it creates enormous brand risk today.
Let's get into the potential damage if this goes wrong. You mentioned the brand's impenetrable armor earlier. That feels like the right image for Ferrari.
Yeah.
How exactly do they build that armor over the decades?
Well, it's a mix of things, right? Decades of dominance in Formula One racing certainly helps.
Huge part of the image.
Yeah. Plus relentless innovation, always pushing the envelope with their road cars, making the absolute benchmark combustion engine supercars. It's an armor built on always delivering peak performance, extreme exclusivity, and that undeniable status. And because that armor is so strong, any potential weakness feels magnified. Which is why this electrical launch is so incredibly high stakes. It's not just about sales numbers.
Exactly. The risk here goes way beyond missing a quarterly target. If they mess this up, the damage to that core intangible value, the idea of Ferrari, could be devastating.
So what are the specific ways this could go wrong? Our analysis pointed to 3 main risks with going full EV.
Right. The first one is all about that performance heritage. What if the Elettrica, even with 1,000 horsepower, just doesn't feel right, if it doesn't feel like a Ferrari should?
What does that mean practically? How can 1,000 horsepower not feel right?
Well, think about driving dynamics. EVs are heavy because of the batteries. So maybe despite the power, it feels a bit numb or heavy in the corners. Or maybe that instant seamless electric torque, while fast, lacks a kind of mechanical drama and feedback you get from a screaming V12.
Ah, the visceral connection.
Exactly. Enthusiasts want that conversation with the car. If the Elettrica feels too much like a very, very fast appliance, that's a failure. That hits their credibility on performance excellence.
Okay, so risk 1. It doesn't feel like a Ferrari. What's the second big risk?
This one might be the biggest existential threat. What if the core customer base, the loyal Ferraristi, just reject the whole idea of a silent Ferrari?
The sound versus silence debate?
Fundamentally, these buyers often say they buy the engine note, the vibrations, the whole sensory overload of combustion. They might accept a hybrid because the engine's still the star, maybe electric is just helping out.
Right.
But a full BEV, they might see that as sacrilege, as fundamentally changing the identity of the car. If enough of them feel that way, that 20% sales target by 2030 looks impossible.
Okay, so rejection by the base, and the third risk.
The third one is simpler, but maybe the most damaging financially. What if it just flops commercially?
They spend the 4.7 billion euros.
Commit huge resources, build the factories, launch the car, and it just doesn't sell in the numbers they need. If it doesn't hit that 20% target, or anywhere close, the market will see it as a massive, costly mistake.
Especially when their rivals were holding back.
Precisely. It would prove their zig was wrong, that the competitors who zagged and waited were smarter. That failure then compounds the brand damage we talked about.
So the implication here is pretty stark. If any of these happen, bad driving feel, customer rejection, commercial failure, it could create the first real chink in that Ferrari armor. Maybe the first one ever.
I think that's fair to say. That late 2026 launch is absolutely pivotal for the company's intangible value. Remember, when you buy race stock, you're not just buying factories and current profits. You're buying that promise of enduring exclusivity and unmatched performance.
And if an EV shatters that promise,
then the whole reason for that premium valuation starts to crumble, no matter how good today's margins are. It really feels like an all-or-nothing bet in the court of public, or at least very wealthy public opinion.
Okay, this context of high-stakes brand risk makes that 16% stock drop seem almost understandable if the car itself was seen as the problem.
Right, if.
But we've kind of established the initial specs look strong, so it wasn't the car. Let's finally pivot to what actually caused the crash. The financial guidance released alongside the car. Right, let's set the record straight here for everyone listening. The real reason Ferrari's stock took that nosedive. It wasn't about the car's specs or the laser show.
Nope. It was all about the numbers. Specifically, the financial forecasts Ferrari put out at the same time they showed off the Elettrica.
It's almost a classic Wall Street story, isn't it? Market reacting to spreadsheets, not just sheet metal.
Absolutely. And what makes it even more confusing initially is that Ferrari actually had some good news on the financial front, at least for the near term.
Yeah, they actually boosted their forecast for next year, right? That seems like it should have helped the stock, not hurt it.
You'd think so.
Yeah.
They slightly raised their outlook for 2025. They're now expecting profit of 8.8 euros per share,
Okay.
and predicting revenue of about 7.1 billion euros for 2025. That's solid. It shows business is good now.
But the market, especially for a stock like Ferrari that trades at such a high multiple, they're not just looking at next year.
No way.
Yeah.
They're always trying to price in growth years and years down the road, 5, 7, even 10 years out. And that's where the problem was.
The long-term guidance.
Exactly. The disappointment, the reason for the crash, was entirely focused on the projections for 2030. The market basically punished them for not being ambitious enough about the future.
Okay, let's break down that gap. What did Ferrari say about 2030, and what was the market expecting?
So Ferrari came out and projected adjusted earnings for 2030 at 11.50 euros per share.
Okay.
And they based that on a revenue forecast of 9 billion euros for that year.
9 billion euros. That sounds like a lot of revenue, even for Ferrari. So where's the disappointment?
The disappointment comes when you compare that 9 billion euro projection to what Wall Street analysts, the consensus forecast aggregated by firms like FactSet, were already expecting.
Ah, the expectations game.
Always. The analysts covering the stock were expecting Ferrari to hit 9.9 billion euros in revenue by 2030.
Okay, so 9 billion versus 9.9 billion. That's a 900 million euro gap.
Precisely. A 900 million euro shortfall compared to expectations 5 years from now. And that number is what triggered the sell-off.
Wow. So why does a gap that's still years away cause such an immediate, drastic reaction? Nearly 16% wiped off the value.
It comes down entirely to Ferrari's sky-high valuation. As we said, it trades at a huge premium, a really high price-to-earnings ratio, or PE, much higher than other luxury brands, let alone regular car companies.
And that high price isn't based on selling millions of cars today.
No, it's based almost entirely on the expectation of consistent, premium, compounding growth far, far into the future. The market demands that growth to justify the high price it's already paying for the stock.
So the higher the valuation multiple, the more sensitive the stock price is to any hint that future growth might be slower than expected.
It's exactly. It's like a tightly wound spring. The market had priced Ferrari as if 9.9 billion in revenue by 2030 was a given. When Ferrari themselves came out and said, actually, we're aiming for 9 billion, it's like letting some air out of that premium balloon.
That 900 million euro gap wasn't just a number. It was seen as a signal that maybe the long-term growth story wasn't quite as spectacular as previously assumed.
Right. It instantly called that whole premium valuation thesis into question. The narrative that justifies the high stock price depends on that aggressive future growth. Reduce the growth, and you have to reduce the price.
It's really just valuation math then, an outsized reaction because the starting point, the valuation, was so high. They weren't reacting to bad sales now, but to a slightly lower slope of predicted future cash flows.
That's a great way to put it. When you discount those slightly lower future cash flows back to today using the high multiple the market demands, boom, you get a big immediate price drop.
So in the end, that slight weakness in the 2030 guidance just completely blew everything else out of the water.
Totally overshadowed it. The positive 2025 news, the impressive EV specs, the laser show, none of it mattered in that moment. The market fixated on that long-term growth number and decided it wasn't quite good enough to support the existing stock price.
The narrative shifted, maybe just slightly, from Ferrari is unstoppable to, okay, Ferrari faces real constraints and challenges in this EV shift.
And that subtle shift was enough to trigger the correction. It's crucial for you, the listener, to get this. The plunge was about the growth math, not about the car itself being a dud.
Okay, so let's try to synthesize all this. We've got the strategic risk around the Elettrica. Will it feel right? Will the purists buy it? And we've got the market freaking out over long-term financial targets. So what's the core choice here for someone looking at Ferrari now?
Well, it really boils down to a classic investment dilemma, doesn't it? Do you focus on the immediate shock, the disappointment about future numbers missing analyst targets? Or do you focus on the underlying strength of the actual business, which seems largely intact?
Because the underlying business is still incredibly strong.
Oh, absolutely. This looks like a valuation correction, the market adjusting its expectations, rather than a sign of fundamental problems within Ferrari. When you look at the business itself,
That 51% gross margin?
right, margins that other car makers can only dream of, competitive advantages, the brand, the exclusivity, the waiting lists that are incredibly difficult, maybe impossible to replicate.
They really do operate in their own arena.
They do. So this suggests that maybe that near 16% drop really was, as some commentary suggested, just a brief and small buying opportunity.
Buying the dip, essentially.
Potentially. Because the sell-off seemed driven by analysts' expectations that were maybe a bit too optimistic, rather than by Ferrari suddenly performing poorly or messing up execution. They're still hugely profitable. They raised 2025 guidance, and they're undertaking this massive strategic shift.
So the optimism about the future seems justified, but it comes with a big asterisk, right?
A huge asterisk. It's entirely conditional on them nailing the execution of this EV strategy we've been talking about, which means the single most important thing to watch is that Elettrica launch in late 2026.
That's the moment of truth.
That's the hinge point for hitting those 2030 financial targets, and frankly, for the long-term brand trajectory. If the Elettrica and the EVs that follow really resonate with those core enthusiasts and attract that next generation,
Then maybe those 2030 numbers weren't ambitious enough.
it's possible. Success could mean they eventually blow past that 9.9 billion euro expectation. But first, they absolutely have to successfully navigate that jump from hybrid acceptance to full BEV adoption. That's the chasm they need to cross.
Okay, so this whole situation, the strategic gamble, the market's reaction, gives us two really critical takeaways from this deep dive.
What's takeaway number one?
The stock plunge was driven by future financial projections, specifically that 900 million euro gap in the 2030 revenue forecast compared to expectations. It was not about the Elettrica car itself being rejected.
Super important distinction. It highlights just how volatile stocks with high growth multiples can be.
And the second key takeaway.
Ferrari is making this massive strategic bet. They're zigging going hard into EVs with billions invested precisely when their main rivals like Lamborghini, Porsche, and Maserati are zagging, delaying, cutting back, being cautious.
It's a bold contrarian move.
Hugely. It puts them in a position to either dominate the next era of ultra-luxury performance or potentially face the biggest brand misstep in their entire history if it fails.
So understanding that nuanced market reaction versus strategic reality helps you see past the headlines.
Exactly. You can separate the noise of analyst targets from the fundamental strength and the huge ambition driving the company right now.
Which leads us perfectly into our final provocative thought for you to consider this week. It builds right on everything we've discussed.
Okay, let's hear it.
We established that about half of Ferrari sales right now are already hybrids. So that customer base is clearly okay with some electrification helping out the combustion engine.
Right, they've accepted the electric assist.
So the big question is, does that comfort with hybrids automatically mean they'll accept a full battery electric vehicle from Ferrari?
Hmm.
Or is the very essence, the soul of a Ferrari, so deeply tied to the sound, the vibration, the whole theatrical performance of a combustion engine?
That even a 1,000 horsepower EV, no matter how fast, just can't replicate it.
Exactly. Have the engineers solved the physics of electric performance only to find they can't solve the mystery of the Ferrari soul?
That really is the 4.7 billion euro question, isn't it?
Yeah.
And the market, the enthusiasts, everyone is waiting to see how Ferrari answers it starting in 2026.